Hey guys, Lincoln here from BoAcademy.org. Today I want to talk to you about market capitalization. I've mentioned multiple times in previous videos that the price of a stock does not really matter. What matters is the market capitalization of the company, right? The stock price can be anything at any given time. The company can go through stock splits and make their stocks cost more or less, but what really matters is how valuable all of the company's stocks are together, right? This is the market capitalization, right? It's as simple as that. So I know I'm just throwing around words here, but let's look at what market cap means. Let's actually break down the word market capitalization and understand how to actually calculate it and how to use it when deciding what to invest in. So let's break down the phrase market capitalization into its two parts. So first, market. So a market is a regular gathering where commercial sales and purchases of goods occur. And the price of those goods are determined by the market, right? Supply and demand. The more people want the goods, the higher the price goes. And the less people want the goods, the lower the price goes, right? The market determines the price of the good. So that's the market part of the phrase market capitalization. So now let's talk about capitalization. What does capitalization mean? So the word capitalization in the dictionary means the provision of capital for a company or the conversion of income or assets into capital. So that's the capitalization part of the word market capitalization. So the market capitalization is how much the company is able to convert its income and assets, stocks, into capital, money, right? So market capitalization helps us determine the size and value of a company in the market at any given time. So how do we calculate market capitalization? To determine the market capitalization of a company on the stock market at any given time, you have to multiply the total outstanding shares of the company by the price per share of the company. So if the company has 1 million outstanding shares and each share sells for $100, then the company has a market capitalization of $100 million. So because the stock price of a company fluctuates every second, so does the market cap, right? Because the stock price is part of that calculation. But the market cap is not going to fluctuate so much during a single day unless there's big news that causes the price of the stock to increase or decrease dramatically. So if a company's stock price goes from 100 to 150 cents, the market cap is still around $100 million. So that change isn't really noticeable. But if the stock price of the company in our example goes from $100 to $150 in a single day, then the market cap is going to go from $100 million to $150 million in that same day. And that's very noticeable, right? Because the market cap goes up $50 million. So that's the effect of the stock price on the market capitalization. And then of course the company can issue more shares of the company onto the market. So then they have more shares out there at the same price. So they can say, hey, we have 1 million shares on the market trading at $100 per share. We're going to introduce another 1 million shares. And so now we have 2 million shares on the market and they're trading at $100 per share. So now our company is worth $200 million. But that's really not how it works in reality, because if they issue more shares of the company, they're going to dilute the existing shares. So the value of each existing share on the market is going to go down a little bit, right? Or considerably, depending on how much they dilute the value of the shares. So if they issue too many new shares, they can dilute the price of the existing shares on the market dramatically. And that will cause the market cap of the company to potentially go down for temporarily. But they might still do this because they believe in the long term, if they have more outstanding shares, the price of their shares will eventually rebound and continue to rise, right? So there's lots of math going on here, but it's all very simple math, right? So that's what a market cap is. And let's look at how we actually use it when deciding how to invest. So companies are generally categorized into 3 buckets of market cap. There is small cap, mid cap, and large cap. Small cap is anywhere between $300 million and $2 billion. Mid cap is anywhere between $2 billion and $10 billion. And large cap is $10 billion and beyond. So when looking at a company to invest in, how can you find the market cap of the company? All of the math is already done for you on most brokerages. So all you have to do is go to the company's page on your app or on the website of your brokerage and look for market cap. Most brokerages like Robinhood prominently display the market cap of the company. So all you have to do is scroll down a little bit and see the stats of the company, and you will see the market cap in the section that talks about how big the company is. But if you can't find the market cap of a company on your brokerage, you can just Google it. Just look up market cap of XYZ company and you will find it. It's pretty simple. So how do I, as a growth investor, think about market cap? So when I'm looking at a company to invest in, I want to know how viable is this company today and how valuable can they become in the future. If I invest my money in this company, will they be able to grow 10x, 20x, 100x in my time frame, in my time horizon, right? 5 years, 10 years, 20 years, 40 years down the road. Is this company at the right stage for me to invest and grow with them? Are they small enough and innovative enough that I can invest my money today and benefit from the appreciation of the value of this company over the long term? Because I want to invest in companies that have great growth potential, that are going to continue to grow into the future, right? I'm not looking for companies that are already settling down and established, like the Disneys and the Oracles and the IBMs, because they're pretty much done growing. They've reached maturity, right? So I'm not interested in those large cap companies. I'm interested in small and mid-sized companies, right? The companies that are just getting started, that are in the early stage and can actually grow as I grow. I plan to invest my money in growing companies today and build my wealth over time so that when I'm ready to retire, I have enough money that will continue to make money for me and allow me to deduct enough money that will cover my living expenses every single year without cutting into my principal, right? That's how I plan to retire. So I need to invest in companies that are going to continue to grow. So I'm looking at a company to invest in. I consider how big they are and then compare them to their smaller and larger competitors, as well as the age of those competitors, so I can determine if this company can actually grow enough in the time horizon that I set. So take Redfin, for example. They're pretty early on in their life cycle, and their larger competitor is Zillow. Zillow is worth magnitudes more than them. But I believe that Redfin is small enough but innovative enough that they can eventually catch up to Zillow, right? Because they're just getting started, they're hungry. They want to grow, they want to win in this market. So if they work hard enough, they can take my money and everyone else's money that I invest in them and use that to innovate and catch up to Zillow. So over time, they will become at least as valuable as Zillow, which is a very viable company today, right? That's how I think about this stuff. How valuable is this company today and how valuable can they become, reasonably comparing them to their competitors in the space. So that's part of how I make my investment decisions when trying to figure out which companies to invest in. Right? I'm not just looking at the price of the stock, because it doesn't matter. If I want to buy this company, I can buy fractional shares if I can't afford to buy a whole share, right? The price doesn't really matter. So that's what a market cap is, why it matters, how to find it, and how to use it to make better investment decisions, right? The stock price doesn't matter. When you're looking for a company to invest in, instead of fixating on the price of the stock, determine what the market cap is and then compare the market cap of that company to its nearest competitors and figure out if this company can grow enough to turn your money into a larger amount that will satisfy your needs. If the company is the younger and smaller competitor in its space, compare it to the bigger guys and figure out how long it's going to take for them to actually reach these bigger competitors and become as valuable as them. If the company is a market leader like Tesla, then give more consideration to their pace of innovation. What will they need to do to increase the market cap of the company by 5x, 10x, 20x, 100x in the next 5, 10, 20, 40 years, right? And is the world ready for this level of growth and innovation from this company? Tesla could do all the greatest things in the world, but if the world isn't ready for that kind of innovation, then it's going to flop, right? So timing matters. Is the world ready to embrace this kind of innovation from this market leader? Right? Because that's going to matter in how much they can increase the market cap of the company. And of course, the most important variable is how long can you afford to wait for them to grow their market cap to the level that you need? Are you willing to wait 5, 10, even 40 years for them to 10x their market cap, right? You have to know how long you're willing to invest in this company and if they can actually reach the market cap that you want them to. So long as you're a long-term investor who is invested in great companies that are still innovating and you're practicing the bull mentality, then you stand a great chance to benefit from the appreciation of the market cap of the companies you invest in. The bull mentality is that we know what we invest in. We understand what we invest in. we believe in what we invest in, and we hold for the long term. That's how we build wealth in this country, right? That's how we give ourselves the best chance of success in the stock market. So thank you for watching this video. If you enjoyed it, like the video below, subscribe to the channel, hit the notification bell so you know the next time we publish a new video, and comment what you've learned and what you would like to learn in the future. I'm Lincoln Daniel with bullacademy.org. Thank you again and have a great day.